Good evening, everybody. Uneducated Economist here. So, I have been asked the question, why hasn't the economy collapsed yet? Or when will the economy collapse? What will trigger the collapse? And I find this to be a very interesting question because a lot of people will look for this to be something of a broad experience amongst everybody out there, this total collapse of the economy. And I'm thinking, well, if that's the collapse you're looking for, then you really have to understand what would trigger that is the new money turning off. However, there will be a collapse that takes place not for everybody, but for a good vast majority of people who suffer the consequences of ever increasing amounts of new money that comes into the system. So there is a collapse underway of 80% of the people. And then there's a collapse that could take place if the new money was to churn off. Everybody would fall into that pain and misery. Give me 1 second here. I forgot to plug my phone in. Got some charging to do there. Make sure it's plugged in. Okay, so for many of you who follow me on this channel for any length of time, heard me talk a lot about the Cantillon effect. Understand it for the realism that we now face, considering what it is that we have had in this nation for an economy was ever increasing amounts of new money. And now when we think what happens when that new money pours into the system, the people who have first access to it are not going to just go out there and just create a better environment for everybody. If there's not a return on investment, they're not going to participate. And now there was a time when our labor, the working class individual, the blue collar worker, was very productive and can produce a lot of money for those who are in power or the people who are investing into this economy. Those who were looking for the return on investment could use the American labor for their benefit to create not only a great environment here in the United States, but also a wonderful experience for themselves as they get a nice return on that capital investment, considering what it is that the production of the United States could offer. Now, that nice, wonderful experience that was taking place here in the United States, a lot of people wish and hope and dream and pray will come back to our experience here to say, hey, look, we got this awesome economy that's great for the working class individual, it's great for the family, it's great for everything out there, and we wonder why it is so difficult for the average everyday person to get it. Well, we have to think this is not the same economy that we were operating, the United States, was operating back during the 40s, 50s, 60s, into the 70s, 80s, and maybe even possibly some of the early 90s. But it was after, excuse me, but it was after the great financial crisis that everything changed. Why it changed, how it changed, this is the critical component that so many people find absolutely confusing. They have a tendency to blame the rich elitists out there, and I totally get it. Like if they're getting richer, what does that tell you, right? That there's a system set up for them to get richer. Well, if you understand how the system is set up, no matter what, they are going to get richer. And there's nothing that really can be done except for a churning off of the new money. And that is a painful experience for everybody. So let's reel it back just a little bit so that we know exactly what it is that we are sitting in, because we are facing something coming from the Federal Reserve that is not going to be pretty. Now, when I mean it's from the Federal Reserve, is that they literally have one job. Now, I know a lot of people say, well, the dual mandate and all this other stuff. Okay. They literally have one job, and that is perspective management, right? That's it. How it is that people are feeling about the current situation. Now, if they can handle this imaginary force, which is your belief system, then they can actually have a monetary policy. Now, that is probably the most confusing thing for somebody who is new to the YouTube or to the Uneducated Economist, my YouTube channel here. Those who have been following me for any length of time, those who are familiar with the UE University, those who understand the credible threat theory, old news. But for those who are really trying to understand why it is that why it is that we have not experienced that collapse, why it is that that collapse is taking place. There's two economies operating right now. It's a two-tier economy. And so when you say when is there going to be a collapse, there is one. There's one taking place right now. Then there could be another one if the new money turns off and everybody falls into the pain and misery. So now, how does this Cantillon effect work? How is it that new money coming into the system would sound so wonderful? Like, why? You think about it, it was just like, hey, we're going to bring in a bunch of new money. Doesn't that sound great? Yeah. Like, it sounds, yeah. I mean, bring me the new money. Absolutely. I mean, it sounds like a great experience. But when we think about what happens when new money comes into an economy, we have to think, what is it that human nature wants from new money? What do they really want? They want to have fun. They want to enjoy it. How many people out there say, I want a bunch of new money so that I can hoard it for no use? Like nobody. Like some people might say, oh no, man, I'm really worried about the future. And so I don't want to spend any of it now in case I can't get any into the future. There might be some people like that. But for the most part, if somebody was to come into a bunch of new money, they want to enjoy it. And that is not hard or difficult, or you can't even really blame somebody for that. But what happens from that? When new money comes into the system and people have access to that new money, they end up spending that. Now, if you go and you look at everything that happens within our economy, it comes down to spending, aggregate spending, the consumer. How is it that you get the consumer out there? Because we are a consumer-based economy. Very different from being a production-based economy. So now, where did the new money come from? Like, if you get new money coming in, you're going to enjoy it, right? Guaranteed. New money is great. Everybody loves it. But where did the new money come from? Did the new money come from production? Like, I mean, if you're producing things and you're producing really good quality stuff and you're getting money coming in from this quality production that you're doing, well, that's pretty good sustainable like effort that you're putting out there. Now, you will have to continue to produce in order to get the money coming in, but if you bring in fairly good, consistent, productive money, then you can use that money towards a savings or investment into more production. Now, that is what a strong economy is built on: production and savings. In fact, anybody, it doesn't matter if you're a country or a corporation or a county, municipality, it doesn't matter what you are, even an individual person. If you increase your production and you start saving and returning on your investment from your production, you're probably going to be in a really strong position. Am I wrong? Like, doesn't that sound like a great place to be in? High income, great savings account, got great investments taking place. Like, sounds pretty good, right? Like, that's a great place to be. That was the United States back in the 40s, 50s, 60s, even after the 70s for a little while, even though we were going bankrupt and all that other stuff, we were still somewhat productive and we could perform fairly well. It was after that that we slowly faded away. And it wasn't like we weren't fading away before that, but we started fading away from the ability to use that production to bring in new money. And that's where the key to it is. Where did the new money start to come from? Because if it's not coming from this production savings, where is it coming from? Debt issuance. Now we got a whole different game to play. Right? So here you are, productive, savings, doing all this wonderful experience with your hard work and return on your investment. And that kind of came to an end. And now you're using your credit card in addition to all the hard work that you're putting out there in order to maintain your life. See, now this is a switch. The United States, when we said, okay, well, this is where the economy becomes two-tiered. Before, we were all in it together, right? The American worker is the backbone of this economy. Without a good, strong, hardworking American, workforce, we ain't nothing here in the United States. And I totally agree. That's if you're a good, hardworking, productive nation. So when we were doing that, yes, it was very important. But then we switched to U.S. Treasury issuance for our main source of new money. Now we got a difference taking place here because the new money coming into the productive person that was going into savings and reinvestment and return on those capitals and having a good, strong economy has now switched to a debt-based currency, and ever increasing amounts of debt issuance is meant to go to the consumer. So new money coming from production, new money coming from debt issuance. So now let's hold on just a second here, right? Because we got the Cantillon effect happening on a separate scale. See, Cantillon's described that if you have ever increasing amounts of new money coming into the system, doesn't matter really where it comes from. But if that's coming in, you're going to start increasing the consumption, and now you're going to start having issues with domestic manufacturers not able to compete with the foreign production that's got out there. So here we have the Cantillon effect taking place with this issue that the United States was facing, being that productive nation that was losing its ability to compete with the foreign producers out there. New money was coming in from our production, but we couldn't compete. Nixon comes up and says, you know what? Let's sever that gold standard thing. Because if we stick this out for any longer, we're going to import stuff and we're going to export all the gold. See, Triffin's dilemma. This is the underlying economic force that was playing out. Very scary scenario that was going on. I mean, here it was. We were this hard-working, productive nation producing the world's greatest stuff. And we were losing that. What were you going to do? We can just say, okay, we have to take the hit. We have to all go into poverty and misery and failure in order to go through a collapse, in order to be productive again against the foreign producers out there. That's the only way. We were a productive nation. We were producing the world's greatest stuff, sending that stuff out to the world. The world sent us their money. We raised our standard of living. When we raised our standard of living, we started consuming more, and the foreign competitors say, ha ha, look at where we got a market. The United States has a lot of money, and they're spending it on foreign production. That foreign production comes in, money goes out. So as the world reserve currency started to take place by the United States saying, hey, you know, we got this dollar that's backed by gold. Do you know how big of an issue this is? This is huge. This is a massive problem for the United States. You know why? It's because everybody wanted to do transactions in dollars. They believed it was as good as gold. And so long as they thought it was as good as gold, they wanted to use it as gold. Here, the United States was like, well, we have all the gold, and if we have all the gold, they can't do transactions. That's a problem, right? See, like, okay, you think about it. Here you are, you're like, say you got a little village, right? And the village has a handful of gold coins in it, and you figured out to be the most productive person in the entire village. And you said, okay, well, I'm going to save all the gold coins I get. And then pretty soon you have all the gold coins, and everybody else is going, hey, we're starving because we don't have any ability to do transactions because you have all the gold. That's what the United States was facing. And they said, you know what? We can just set up this Federal Reserve Bank over here and have an elastic money supply, so when the gold gets concentrated, we can hand out a bunch of this fiat currency, and we promise we won't print too much. You know, we only print out enough to handle all the transactions that needed to be done out there. And pretty soon people were like, you know what, you really guys did print up too much money, right? You printed too much dollars. And the United States was like, no, we didn't. And Nixon was like, yeah, we did. Right? And that whole administration was just like, well, we can either give gold out there because obviously we have it all, or we can go on a 100% fiat-based currency, and we'll just keep the gold. And the transactions can still take place because, you know, I mean, hell, they were doing transactions with dollars anyway. They weren't doing it with gold, so why don't they just continue doing it with dollars? We promise we won't print too much. Yeah. See the difficult road that they're down now. Here we were, hardworking, productive nation that was going to collapse into the abyss because we had all the gold and we were done with the production. Foreign producers sending us stuff was going to mean we were going to send out gold. And that was eventually going to collapse the United States. And we said, no, thank you. We'll sever the gold standard. You can use U.S. treasuries because, you've been using dollars anyway, so it's just as good. Why not? All right. So you hold on to U.S. treasuries as if they were gold, and the U.S. treasury will now be the main form of currency for the world to use. This is a major problem for the United States if you are a working class individual, because your job is not where the new money comes in from anymore. It used to come in that way. We were this manufacturing powerhouse producing the world's greatest stuff and sending the stuff out there to the world. The world sent us their money, but now it's coming from debt issuance. How is the working class individual getting the new money from their production if it's a debt-based currency with major debt issuance bringing in the new money? It was just like the working class individual is like, where the hell is that new money coming in from? You see where I'm getting at here? It's not coming from your production. It's coming from the consumption. It's coming from a debt-based consumption economy. And now the working class individual, that producer, that manufacturing job is just like, I actually have a manufacturing job, but I can't seem to really buy much with it. Like the job is very difficult to operate with. Why is that happening? Right? Why is it becoming so difficult for this job that used to be able to hold on to what would be considered the American dream, and it seems to deteriorate further and further away? Why is this happening? Well, if you think about how it is that the new money comes in, it doesn't come in from the production. They're not being a producer of new money, right? Coming in so that they could take advantage of it. The people who are closest to the new money get first access to it. They get to take full advantage of it. But if you're waiting for it to trickle through the line before you get to it, how much buying power do you think it's actually going to have by the time you acquire it? It'll be essentially gone. There won't be any buying power. And this is why we experience it. It's like our paycheck doesn't seem to cover the bills anymore. The buying power of the dollar is disappearing. But is it the dollar that's disappearing, the buying power? It's your job. Your job doesn't have the buying power to it anymore. So you can't use your job for the real goods and services because we don't produce the real goods and services. We buy the real goods and services from foreign competitors. So if you're not in a position that is closest to the new money, well, then now you're going to have a difficult time getting access to those goods and services because you're not trading it with your fellow other working class individuals. You're in competition for the people, with the people who do have first access to that stuff. And where are they? Up at the top, getting new money in. There's this two-tier system now operating where people are like, how come it's so difficult down here with our awesome jobs that we used to have seeming to be so difficult now as we go into the future, and this is getting harder and harder, and they question why. Well, at the top 10, 20% are going, yeah, housing crisis down there, that seems real difficult for you guys. Sorry about that. And, as we kick ass and take names and have an economy that seems to be doing quite well because they have first access to the money. They're very close to it. People who borrow money at a low interest rate and deploy that into a cash flowing asset are absolutely killing it in this economy right now. People wonder, well, what's going to happen? Where's the collapse going to come from? Well, it's going to collapse when the consumer stops. Now, back in the day, right, because we're a consumer-based economy, so when the consumption stops, right, the whole thing falls. Back in the day, when we were the manufacturing powerhouse, the consumer was who? Us, the working class individual. We were the consumer. So when we had a job, and we had a good job, and we got a good raise, and we were dedicated to the outcome, we got a lot of money that we got to consume with. Well, that's not us anymore, right? I mean, we're already talking about it. The consumer is not us, the working class individual with a good job and finding deteriorating. Not us, right? Back in the day, that was us. We were the consumer. So if we had a good job, good pay, good raises, good, steady income, we were the consumer. That was the backbone of the economy. We operated there. Today, no, not so much. Where's the consumer? The consumer's at the top 10, 20%. So we look back up there and it's like, oh, but they're kicking ass and taking names, right? So they're consuming, they're doing quite well. And it was just like, sorry, guys, this is a two-tier economy and we're kind of focused in on where it is that the consumption is happening and where the new money is flowing in and where it is that the economy can be dealt with. Because the economy, your economy, the rest of the economy, you're not the important part of it anymore like you used to be when you were the production. You were the producer. You brought the new money in, but you don't bring the new money in. The new money comes in from the asset holders. So now here we got this two-tier economy that if you're not part of the asset holders, you're down here in the working class trying to figure out why it is that your dollar and your wages and everything else is not keeping up with it. But yet up here, the asset holders are saying, well, I don't know why. Yeah, I mean, it's really sorry. Housing crisis. Sorry about that, guys. Right. And they just continue on with their income allocation. Right. And so now how does this happen? Through the debt issuance. Because we think about it, when we were the manufacturing powerhouse, we brought that new money in. We were very close to it. But now the debt issuance comes in. And what happens to the people here? Because we don't seem to be very close to the new money anymore when it has to trickle through the retail system before it finally gets to us. So why is it that some people have access to new money and other people seemingly don't? Well, the thing is that everybody has access to new money. Everybody does. Everybody seen a credit card? Right? New money. Now, what happens? Who's taking the new money and what is it that they're doing with it? Because you have two decisions you make. You have one of two, essentially. Right? Some people have no other choice. They're like, man, I'm falling into the abyss. I need the debt to make my bill payment. That sucks. You're gonna eventually collapse. Now, there's other people out there who are like, okay, I have access to new money. What is it that I'm gonna do with this new money? See, I heard somebody say this one time. This was a good example of it. See, this is where the psychology changes. I heard somebody say, if you got rid of the student loan debt, think about how much money I could have that I could spend into the economy. Think about how much that would benefit the economy. If you took away my student loan debt so I didn't have to pay it, I could then deploy this into the economy with spending. That's the problem. What would happen with new money? If you had access to new money, what would you do with it? You go spend it. That's what this person said. Give me the new money, I'll go spend it. But if you gave me the new money, I'm thinking, where can I deploy to get a return on that investment? Do I buy a speculative asset like gold and silver, Bitcoin? Do I get into a cash flowing asset like rental properties and dividend paying stocks? Do I use it to start my business? Do I get a further education with it? There's so many places I could go. Or I could go have a good time. So now who is it that's spending new money on having a good time? Get it. I get it. There's some people who have no other choice. They have to, buy, pay the bills, buy food, whatever. That sucks. You're going to eventually fail. But there's some people who are making a conscious choice to spend it on a good time. Spend it down at the bar. Spend it on whatever, luxurious experience that they are saying, this is good for me, this is me time, whatever they want to call it. Then there's people out there who are borrowing new money and they put it towards a cash flowing asset, like a rental property. There's some people out there who borrow money as simple as using a credit card to buy a handful of lumber to fashion a picnic table together and sell the picnic table. They started a business. Simple as that. There's people out there who start businesses with that debt. They get a return on that. Think about where it is that the majority of the people are using debt. This is the new money coming into the system. It's debt. It's not the government. I mean, it's the government and all that, but it's not like they have a choice on what happens with the underlying economic forces when the government spends, when the people spend, when the corporations spend. When that new money comes into the system, it has a particular effect on the economy, and it's called the Cantillon effect. And that is a separation between the rich and the poor. Again, take the village. Put a bunch of coins in the village. And if you figure out how to be the most industrious person and you're going to decide to save all the coins, you're going to hoard them all for yourself, and the transactions will no longer be taking place in the village because you have all the coins. That is the problem we now face. The ever-increasing amounts of transactions that are now happening within the economy require ever-increasing amounts of debt issuance and currency. To know that ever-increasing amounts of debt issuance and currency is going to flood into the system, there is going to be the Cantillon effect as a result, which is going to be a separation between the rich and the poor every time. Okay? This is every time. So now as I think about how it is that we can face the future, knowing that the collapse is happening, it's happening right now for many people out there. At the same time, the collapse is not happening for a group of people out there. To know who it is that is collapsing and why it is that you're collapsing, as opposed to when the collapse will take place, because it is happening now if you are on the bottom side of the wedge. Now, knowing what it takes to be on the upper side of the wedge, it's a lot. But it doesn't mean that it can't be done. And that's the important part to understand, is that there is no reversal to the situation we face. There will be more war, more debt, and more separation between the rich and the poor. And as scary and as sad as that sounds, once it's accepted, now you can go on and move on and do the right things that you need to do. And mainly, cut back on expenses. Learn skills, learn how to, figure out how to make $1 on the internet, then learn to make 2, then learn to make 6 and 8 and 10, and then onward, right? And once you start figuring out how you start making money on the internet, you start figuring out how you're going to turn that money into a return, right? Because you got to be industrious, and then you got to figure out how to make that money make money. Because if you don't do it this way, you will be left behind. And I get it that a lot of people say, man, I don't want to be a capitalist. I don't want to be an investor. I don't want to do this. I don't want to be all that stuff. And I get it, man. That's too bad. Because you're going to get left behind. It's not a matter of whether or not you want to. I don't want to do a lot of stuff out there, right? But I have to push and I have to hustle and I have to do the things that I have to do as well. And a lot of times I think it's pretty interesting to think like, man, I wish I was in a different area so that I would have different opportunities. At the same time, I'm like, man, I wish I didn't. I'm so glad I live here as opposed to anywhere else and I have the opportunity to be here. Man, talk about a weird like situation to be in. Yeah. But understanding what it is that's taken place gives me a much better understanding of why it is that being, into rental properties or buying rental properties or building, houses or just being in it is different for everybody depending on your location. And if you happen to be in a location like I am in, you're going to have to get very strategic on how it is that you're going to get into this thing because it isn't the same game. All right, not for a lot of people out there. All right. Let's read some comments here. I got a half an hour into this live stream. I want to continue talking about how it is that the separation occurs and how you can prevent it from taking place in your economy. Because remember, there's not going to be an economy that comes in that saves you. You have to save yourself within this economy. And now understanding how it is that you're positioned is going to be the key to it, because your position, my position, all-nighters position is not going to be the same. And how it is that we handle our position, considering that we're all in this broader economy together, is to understand the economic forces that we now face. Here it is, like I think about it, when there was a time when people said, "Man, what are you going to do?" And I was like, "I don't know. I'm going to follow my old man's footstep, become a plumber," right? And that would have been great, And it was like you teach my old man was a plumber, his old man was a plumber, we all were plumbers. It was just like this lifelong, skill and understanding of the plumbing industry. But then you find you get into a time where being a plumber might not be the lucrative business that it once was. Right. And although you might be able to make a living at it, it's not going to be anything that of any kind of substantial. And you find that it might be harder and harder. Now, don't get me wrong, some people might kick ass at plumbing and have a really good established business. Other people might be trying to get started and not have an easy way in. Other people might be heavily indebted and left over from the issues of COVID. Who knows their situation when it comes to it, but finding that the ability to use that particular job in order to acquire the things that you wanted in your life may be more difficult than it once was. Right? And we're finding this to happen more and more, even within the trades, within anything out there. If you're relying on your presence in order to acquire the money that you need to live, it's going to get harder and harder because it's going to require ever increasing amounts of more of your presence. Okay. That means you have to show up more for work. You have to get more side hustles. You have to do more, uh, overtime. And all these things will only, as time goes on, for further and further away down the line from the abilities to maintain the standard of living. It's just going to get more difficult as it goes on. And again, we have to understand, don't get mad at it, right? Don't get mad at me. Don't try and argue. Like, I mean, I guess you can get mad at me. I don't care. But I mean, don't get mad at the whole situation. The whole situation is one that you can handle, right? It's once you recognize it's like, oh crap, man, if this is happening and I have a job in which my day job is like, it's maintaining my life. But I know that if I continue on with this, it's probably not. Now, if I take on a side hustle, I would have the extra money that I can go and actually enjoy myself with. Or I could take on the side hustle and I can start moving that towards real estate investment trusts. Or I can start buying into Bitcoin and gold and silver because I don't have anything outside of a third party risk. I can start moving into things that I know I'm going to need, whether it's for the reserves, the emergency fund, the growing of my wealth, the network that I need to get together in order to have something of a cash flow that is built because I don't understand how that works. These are the things that you have to move towards. But if somebody says, okay, I get it, I totally understand, man. Like it's going to be harder for my carpentry job. Uh, that's going to pay the bills. I get that part. So what I'm going to do is I'm going to start doing side hustles on the weekend. And that way my carpentry job is good, but my side hustles allow me to drink beer and we're good, right? So I'm just wondering how long does it take before the Cantillon effect kicks in? Like when does it happen, right? Because you almost got it. We're close, right? But the whole point is to be the industrious person who does not at first increases their expenditures. That's the beer, right? Increase of expenditures, who does not at first increase their expenditures and then secures a rate of interest beyond that of their occupation. That extra money needs to go to some sort of return, a security of some sort, like silver, gold, Bitcoin, food, ammo. I don't know. Make something up. It's your creativity and imagination that puts it there. But think of security, one way or the other, right? If it doesn't go into security, it has to go into something that is going to have a return, right? Stocks, bonds, these are great places because not only if you buy them at the right time, the prices can go up, and you can also get a return if you buy the right stocks and the idea that you can get dividend payments, you can get yield. But if you buy the right stock, you can also just get a decent return if the stock price goes up, right? These are the places that have to be moved. A lot of times they say, man, not everybody can get into this. That's absolute wrong, right? Anybody can get into it now because they have the ability to download an app called Robinhood or Cash App or any one of those things, and you can literally use $5 to buy stocks. This is incredible to think about because it never existed prior to now. Now, for some people, they think, no, yeah, dude, it's always been there. No, it hasn't. When I was a kid, that was not available to us. All right. To think that that's available now is putting people in a position in which that extra is now having that return on investment, that secure rate of interest beyond that of their occupation. That's what they're moving into. So Cash App is literally a form of doing that. When people say, "What do I do? How do I do it?" I'm like, man, $5 right there. Figure out what stock it is that you like, because I can't tell you what stock it is. All right. This is your research. This is where it is that you come in. Because if you're not listening at the time of the sell, then you might miss it. So you have to know it and feel it for yourself. If you don't know it and feel it for yourself, you're going to be dependent on somebody else out there to tell you when to buy and sell and all that. And that's not going to work. You have to do it for yourself. Read books on it, follow investors on how their strategies work, and develop your own strategy. Getting into that is vitally important. Now you can do a very secure, very safer approach. There's no safe approach, right? All investments are risk, right? And the idea of taking on risk is getting return. If there is no return, there is no risk. So you have to have the two. And so when you learn how it is that you can position yourself, now you look at it as like, okay, I have the day job, it maintains my life. I'm going for extra so that I can get that return wherever it might be. Might be the setting up of a deposit for rental, or, deployment into a future option of something that you don't even know that it exists yet, right? You're looking for that buying opportunity. This is the constant that somebody should have for the feeling, right? Like if you don't feel that regularly, you're probably going to end up wondering why it's so difficult and struggling, and you're going to be part of that collapse. But if you're thinking about this regularly, then you're also probably thinking, okay, well, yeah, sometimes it's hard, sometimes it's volatile, sometimes it's in a position in which that I'm not sure of. But once you start moving into it, you're going to realize the asset allocation over time was a great thing to take place in, because now you're sitting in a way that says, man, I'm not so worried about the future. My day job doesn't necessarily cut it, but the extra side hustles that I do is enough to get me into a position in which that asset allocation isn't exactly hard, right? It's not easy, but it's not hard, right? Because you can do it with $5. So you see the point of what's happening here is the mindset of the people are very different. There was a time you could just go get that job, just go get a day job and you'd be fine. Right? Even I experienced that. It was a wonderful experience, guys. I'm telling you. To be able to have a part-time job. My wife and I had part-time jobs in high school, rented an apartment. Before we graduated high school, she moved into that apartment, was going to her part-time job and going to school, graduated. I moved in with her. We both had full-time jobs, and it was very difficult, but we were able to pull that off. There was a time it could be done. I can't imagine that being the case nowadays. Maybe somewhere, somehow, some people can do that, but that is not a very likely scenario. There was a time it was. That's the difference. Two kids, day jobs, working at a restaurant. I was working at the lumber yard. Not luxurious jobs by any means. We're able to have an apartment, be able to pay the bills, and we ate leftover cardboard pizza because that's all we had, right? So now this is how life is so much different today. If back then I had the ability to put $5 into a stock, I probably would have done it. Can you imagine the position that I would be able to hold today if I could do a $5 stock purchase? Well, now it's so common, everybody's doing it. Well, now that's a competition for people who don't do it. If you don't get into asset allocation, you're into a position in which that you're now having to use your presence in order to acquire the things that you need in your life. While other people are like, yeah, here pretty soon, the assets are going to be able to provide me with it. Because we don't really produce the things that we buy and sell and all that other stuff. That comes from foreign producers. So your job doesn't really buy that benefit. The asset holders do get to buy that benefit. You see the difference? The new money comes in and it buys that foreign production. You have to let for it trickle down before you can get it. Scary as hell, right? But once you've internalized it and you see it, you're like, ha, ha, I see what's happening here. It's going to be a tough road, man. I better figure this thing out and I better hurry up, because I see that there is no way in the world a politician is going to do anything about fixing this situation. It's going to get more painful for me. If they inject UBI, say, here's a bunch of money, it's going to be really awesome for like a minute. Right? Like those people who get it for the initial, they're going to be like, all right, new money. And what happens with new money? Separation between the rich and the poor. So it's only a matter of time before they are so far down the line that you'll never see the top again. Right? And that's what's going to end up happening with UBI. And it's almost inevitable because they essentially have to produce a consumer. And since the top 10, 20% are already doing like, they're like an embarrassing amount of the consumption, they're like, okay, maybe we need to like force feed some consumption down to the lower end. Think maybe just possibly, or else it's going to be like really painful for them. So it's almost like UBI is inevitable. And then once it comes in, unless those people are conscious with it, like very, very aware, and take that money and pay off their debts and then buy into cash flowing assets, they will find themselves so far down the line that there will never be any shot at it again. Property ownership will never happen. Right? It'll just be way too difficult, way too expensive. I mean, think about it around here. Like, the cheapest place to buy a plot of land is like 50 grand, and then you have to it's questionable on whether or not that it's even going to be usable land, right? If it's guaranteed that something that you can build on, it's going to be like $100,000. And I'm thinking there's houses in this country that cost $100,000. Here, you can't even buy a plot of land for it's like $100,000 to buy a plot of land. Maybe you can find some places that are less than that, but for the most part, good quality spots, super expensive. Well, I think, well, why is that? It's because it's a huge desirable area, and we got lots of new money that pours into this area that's willing to pay that much. All right. Well, you can go to some place where nobody's living, nobody wants to be there. It's going to be a hell of a lot cheaper, right? That's just like the way it is. All righty, guys, I have really gone off, but we got so many beautiful people who are watching today at 270 watching with 69 likes. Continue to hit that like button. With 69 likes, we can certainly have it well over 100. Let's get it up to 200 before we end this live stream. If you can get it up to 200 likes before the hour is over, I don't know, maybe we'll stick around for a little bit longer than that. Other than that, let's read some comments and go through. I'm going to back it up here a little ways. So many wonderful, experienced people up in this live stream talking about Big Hill. I've seen wealth built in one generation by someone who took risk at the right times and worked his ass off. His kids are now big investors and big business owners. Yeah, absolutely. At the right time. Oh, yeah, at the right times. All right, new money, young money, cash money records. All right. Justin says, when you saw it, do you know how that guy's parents raised him or how influenced him to take risk and install that work ethic? Hey, everyone. All right, all-nighter. It's great to see you up in here. All right, Trump has gone bankrupt how many times? I haven't defaulted once yet. Yeah, I mean, well, you got to understand how he plays the game, so... Wayne, all-nighter hider. Hey, buddy. Steven says, buy a ski boat and have some fun. All-nighter says, thanks, Wayne. I forgot to turn the volume of my notifications back up after the dentist. Right. Adam Nash, 1873, says, what does it say? Okay, if the economic growth is based on the top 20%, isn't the stability of the economy significantly less due to the small changes in the 20% would cause massive damage putting your eggs all in one basket? Actually, I kind of look at it very much differently. Now, I think that's a great question and a great statement and a great way of looking at it. You think, okay, so if we concentrate it down to this to a handful of people who are essentially doing the consumption, wouldn't that cause more instability as opposed to stability? And I think to myself, no, actually quite the opposite, because the majority of the people being the backbone of the economy and being the consumer, it really depended on whether or not you had a job. And so if we had this recessionary pressures that were kicking in and people started slowing down on the consumption, it meant that you had a lot of job losses, and that was going to be very difficult for you to have now a consumer within the economy if everybody was losing their job. job. Something interesting that has taken place since the great financial crisis is that everybody going to work and the unemployment falling to a very low level did not create the consumer that the Federal Reserve would once have experienced from their economic monetary policies of lowering interest rates. So, kind of confusing. The Fed would lower interest rates. The corporations would take advantage of low interest rates by investing in their companies. By doing that, they would be hiring people. Hiring people got people working, more people consuming, more people consuming. You would have that aggregate spending, then causing the inflationary pressures. This is how the Federal Reserve would typically handle recessions, right? So a recession would be like a fall in aggregate spending. How do you get the consumer out there? Lower interest rates, people go to work, get the consumer. But after the great financial crisis, you had the unemployment fall very, very low. And it did not create the consumer that the Fed would typically have seen. So now, whether or not you have a job or not doesn't necessarily create the consumer or the aggregate spending within the economy. That's up here at the top 20%. So if you lost your job and we lost the consumer, that would be very damaging for the economy. But now you can lose your job or you can have a job. Doesn't really matter. You're not the consumer, right? The consumer's up there. So if they're cool and their assets are growing, and like Donald Trump says, a lot of them have, houses with a lot of wealth in them, and he wants them to keep that wealth. If this is the idea behind it, is the asset holders get to hold on to their wealth and maybe even increase their wealth because they're doing so much spending that they can actually handle the economy when it comes to aggregate spending and aggregate demand that comes from their experiences of having the assets and the asset allocation and the cash flow. You're not part of it. Like the stability's up there. Just keep the money flowing no matter what. As long as the debt issuance and as long as you have the money flowing, those people are going to be fairly happy. And if they're fairly happy, they're going to continue spending. And since they're doing the majority of the spending, you just don't matter. And I know that's sad. Like, I don't want it to be that way. And I don't like it when people get mad at me and like, dude, you're so wrong. I'm just pissed at you or whatever. And I'm like, dude, it's not my fault. It's just my observation. It's just the way it is. I didn't create this. I continue to hit that like button. We're 10 minutes away. We're 91. We can have it well over 100 by now. All right. With 259 people watching, 92 likes, we should definitely have it over 100 likes. Okay. And underpay Americans where we need 2 or even 3 jobs to survive, depending on where you are in America. Yep, absolutely. And that's unfortunate because your presence isn't going to be enough at some point. Like no matter what you do, it's your day job and your side hustles and everything that you're doing isn't going to be enough if you don't have something that is going to pay you beyond that. Like if you could buy something that pays you, like a dividend paying stock, a business, something, right? Like, rental properties, real estate investment trusts, there's a million things out there that you can look at. There's, it's not up to me to figure that out. Bonds do it, right? There's all kinds of yield. The only problem with a lot of things out there is that it doesn't beat inflation. So you have to think about inflation too, right? Where's the inflation and what kind of return can I get off of that? How long will it take me for me to get that return? This is all something that the people have to internalize and think about. And it's for a lot of people, they're starting at square one. Like, what the hell does he mean by yield? Right? I understand that's a hard one for a lot of people. Like if you have never studied economics and you want to learn about economics and somebody starts talking about the yield and you have no idea what the hell they're talking about, if they're talking about government yield, bond yields, corporate yields, yield on rent, yield on, stock yield, and then you're like, what the hell does he mean by yield? Right? This is where you really need to begin. Figure that out. Figure out what yield means. What is your yield that you're looking for? Right? Because what that really means is think about it from the bond issuance. Here, let's take it back a little bit. Let me grab a piece of paper here. Get all that. Let me get in my notebook. And I'm just going to tear off a piece of paper just because holding a piece of paper just gives me a visual. All right. Piece of paper. Let's imagine this is a bond, right? And now with this bond, right? This is like how old school bonds used to be, because bonds are essentially, there's nothing changed about them except for back in the day they used to be a paper and now they're digital. But it doesn't really matter. They all kind of work the same way, regardless if it was on paper or if it's digital now. So let's just kind of imagine that the bond, right, has $100 face value. Now, what does that mean? It means that at some point in the future, this thing is going to be worth $100 at the bank. Right now, generally it'll have a date on it. So this bond, right, $100 face value bond, has a date of let's say 10 years from now, right? So in exactly 10 years from this day, this bond will be worth $100. You get to take it to the bank. They're going to hand you a $100 bill. Okay, super easy to understand that, right? Like, hit the like button if you understand that. Okay, hit that thumbs up button if you understand it. So super easy to understand that in 10 years, this piece of paper, this bond is going to pay exactly $100 and, on that. Now, what it comes down to is something called coupon rate. Now, the coupon rate is what the interest rate that the bond is going to pay, because a bond is like a loan. It's a loan to the government, a loan to the corporation, it's a loan. And with that loan comes an interest rate. Now, the interest rate is generally paid with a coupon. The coupon literally used to be a little tiny piece of paper that was at the bottom of the bond that you could tear off, take it down to the bank, and collect your interest payment. When you hear the term coupon clippers, I used to think coupon clippers were like old people clipping old, like, coupons out of the paper so they could save money when they go down to the grocery store, right? You remember the coupons, clipping all these? No, coupon clippers were people who were retired because they had a bunch of bonds now in their retirement, and they were tearing those coupons off to essentially go down and get their interest payments so they can continue to live. Coupon clippers. Crazy, right? I know for a lot of people, they totally get there like, yeah, what else would you think? But that's what I used to think. It was like literally people would clip coupons for grocery, get better prices on their groceries or something like that. But coupon clippers were tearing the bottom off of off their bonds and then going and cashing them in. Now, that's the interest rate that the bond pays. So we can imagine that this bond with a $100 face value that's due in exactly 10 years has coupons down at the bottom that pay 10%. So that's a 10% yield, right? You tear this off, you go down, you get $10. It's a $100 face value, 10% coupon, 10% yield. Super easy to understand. Now, this bond, if you were to go for 10 years, you would tear every one of those coupons off, cash it in. That would be your interest payment, right? Because it's a loan and you got to get paid your interest. So you're going to tear all those bonds off or all those coupons off, cash those in. And then once they have cashed in, the bond has become due, face value. You cash the bond in and get your $100. Super easy to understand it that way, right, guys? Like, it took me a long time to try and understand what the hell bonds meant and what yield meant and all that other stuff. But once I kind of understood it this fashion, you got a face value of a bond, you got coupons that you tear off. Each one of those coupons has an interest payment. Nothing about this bond changes, not anything. Doesn't matter who owns it. That will never change. Not the face value and not the coupon. Those things will always be the same, no matter who owns it. Now, what does change is the price that somebody will pay for it. This changes everything about this bond. Not the face value or the coupons, but what it means to the investor. Because if I pay a higher price for this bond than what the person who I'm buying it from, right, they're going to get a better yield than what I get, because I paid a higher price for it. So even if I was to tear off all the coupons and cash them in and get my face value for the bond back, none of that changes whether I owned it or you owned it or anybody else. But if I pay a higher price for this bond, then what I get at the end of my investment is less than somebody who had paid a lesser price for it. So the yield on this bond will go up or down depending on the price that somebody is willing to pay it. Nothing about the bond itself changes, Face value stays the same, coupons stay the same, interest rate stays the same on the coupon rate, but the yield that the investor gets, depending on how much he decides to pay for it, does change. So if the price goes up, the yield goes down, right? How much am I going to get from this bond after it goes through maturity? If I paid a lot for it, the yield continues to go down. Now, if the bond falls, the yield goes up. If the bond continues to fall and it falls below the face value and somebody's like, man, I don't even want this thing anymore, I just want to dump it out there, the yield can go way up. Because nobody's trusting the corporation, the government, the whatever it is, whoever's issuing the bond, they don't trust them. So now the bond price continues to fall and the yields continue to rise. You see how this is working? It's fun times, isn't it? All right. I forgot where we were going with that, but I thought that was a good explanation of those things. Okay. All right. I get refunds because I have so much to write off. Oh, that's cool. No, I don't file. No, I'm uncollectible since 2011. I need to look into that. I came from a family would clip coupons all the time just to survive. We were super dirt poor. See, now that's, I think, a different type of coupon clipping, right? Coupon clipping like from the newspaper to try and save on your items, as opposed to clipping the coupons off the bottom of a bond to go and cash in on the interest payment. Totally different type of coupon clipping, right? All right. And what is the weakness of the top 20% doing the spending? What is the weakness of it? Is the turning off of the new money. But that's the weakness of everybody. Everybody's going to face the same problem if the new money turns off, and that's everybody falling into pain and misery. But if the new money continues to pour in, really, the people who don't have asset allocations are going to feel pain and misery. Right? It's not like they didn't know. It's not like we didn't know, right? It's not like they didn't tell us that this was going to happen. And this is important to understand that they said it straight up. Jerome Powell, August of 2020, in his speech, he just straight up said it, that inflation is great for stability of an economy and all that, but inflation that is persistently too low can pose serious risks to the economy. And now we have a problem that we have persistently high inflation, which is exactly what the Federal Reserve would rather have than persistently low inflation, because that poses serious risk to the economy. Elevated inflation is just annoying as hell, and it really benefits the top 20% anyway. So when you think about it in this fashion, they're not really looking towards us anymore. They're not looking for us to go to work. They're not looking for us to do jobs. They're not looking for us to do any of that stuff like they once did. We were the backbone of the American economy. They wanted us to do it, right? But now we're not that important anymore. And although they want to say, hey, man, you guys are important and we're going to do a lot for you and we want to help you out and stuff like that, they are literally not going to do anything that's going to help you out, because that would mean turning off the new money, which is going to send everybody into pain and misery. Even if they try to help you, like, here, let's give you some UBI. What that is going to do is it's going to literally force feed money into the bottom half of the people who are going to be really excited about it at first, but then that new money coming into the system is going to have the Cantillon effect on fire. To think that you're not going to have the underlying economic force of a wedge of inequality from the Cantillon effect from new money pouring into the system is very naive. It will definitely happen. The people at first will love it. They will think it's great. They will be so excited about it to have that money coming in, and they're thinking, man, I'm finally going to pay my bills and do all the wonderful things with it. But as that money starts to come into the system, it is going to wreak, it is going to be havoc. It is going to be so ugly. And I don't think people are really quite prepared for the idea of never once ever being able to get into property again. But if they fire up UBI, you can almost guarantee that will be the case. Like, think about it now. Think about how hard it is to get into property now, and they haven't even got UBI yet, right? Think about when UBI fires up. It's going to be almost impossible after that. It will be almost impossible, right? Right now, it's already feeling impossible. It will be impossible if they fire up UBI. I guarantee you that, right? Like, I mean, you'll come back to this video and go like, man, how are you able to call that out so easy? And I'm just going to be like, it's easy because it was new money coming in. That's all I had to think about. If it's new money coming into the system, I don't have to care how it's coming in, right? Because it's important how it comes in. It's going to definitely, for your position personally, but the outcome of new money coming in will always be the same, separating the rich from the poor. No doubt about it. Just take your little village, throw a handful of coins in there, and tell one person to collect all the coins. What happens to the transactions if there's no coins available because one person hoarded onto it? This is the point. All right. New money comes into the system, it floats to the top. Everybody else who doesn't have new money or got access to new money and then spent it, where did it go? It goes right up to the top. So if you throw a bunch of new money in and you don't keep it and you don't invest it and you don't put it into places that then get rid of your debt or give you a return on your capital, then what's going to happen is it's going to go right to the top and they're going to have it and they're going to be super rich with it. That's what's going to take place. Like, you can't stop it, you know? The Supreme Court has ruled it's the taxpayer's responsibility to pay as little as required, even if zero. My lumber for 850 square foot place at Chinook Lumber was $10,000, 2019 price, 2x6.2. Not true. It's a hardship. Not just anyone can game the system. Who's printing this money? How did they get the gig? You know, that's a pretty interesting question, but ultimately it came from it came, you know what really caused it is that JP Morgan, the man, was sick and tired of bailing the nation out because this nation would go through a depression. Like, I don't know how many times this nation has been through a depression, like 12, 13 depressions or something like that. Countless recessions. It was just constantly happening. But the problem we were facing back in the day is that we were running through business cycles that were just devastating to our United States business, to the people, to the economy. They would be short-lived, but they would be hardcore. Because what would happen with the gold currency or silver currency is that allocation of the money. Like, if you start having a business cycle ramping up and you have a lot of transactions, then you're going to have a lot of concentration of wealth. People who do business concentrate their wealth, right? You want to save the money so you can go and buy a bigger item. So as this concentration of wealth takes place, the ability to do transactions in the economy diminishes, and then you have this collapse within the business cycle. All the money gets redistributed back out there and it starts over. Now, what they figured out back in the day is that, well, maybe, just maybe, during this business cycle, as everybody's ramping up their transactions and this concentration of wealth starts to happen, we can have an elastic money supply where we'll inject money into the system during these business cycles where it's a lot of transactions happening, and we can keep that thing flowing. That way there is no concentration of real wealth, and that the transactions can happen. And then if the business starts to slow down, we'll pull that money back out of the system, and we promise we won't print too much. Now, this was what it was sold as, right? This was what it was sold as. But that's not how it works. If you inject money into the system, there's going to be a concentration of wealth. If you inject more money into the system, there's going to be more concentration of wealth. You can't stop it. Like, they're like, during the times of the business cycle, when things are ramping up and that transactions are happening, we're going to inject money into the system so the transaction can continue. That will concentrate into the hands of a few. Like, it can't stop it, right? So they're like, hey, we want money for doing transactions, right? And they're like, yeah, sure. Okay, so we'll inject the money into the economy so you can do transactions, and then it concentrates into the hands of a few. And then what happens? Transactions start to slow down. They're like, well, what do you need? More money. More money, right? Concentration of wealth. What do you need? More money. More money. Concentration of wealth. You see what this is happening? You continue to do this over time. Pretty soon you have all this wealth into the hands of just a few. And they're thinking, well, if we relinquish this wealth, all this money back out there, it completely collapse. So we have to hold on to it and let you guys play with that little bit that you have down there. Because if we give it to you, it'll all be over. Don't worry. We'll fire it up here again just in a little bit, make sure the transactions can happen. Zzz. Concentration of wealth. Guys having fun? 271 people who are sticking it out through this live stream, an hour into it. Thank you so much. Continue to hit that like button. By hitting that like button, you'll get more people to join in on this. And we want it up to over 1,000 people, because the more people who get this information, the better off we're all going to be. We'll all naturally just be making the right decisions for ourselves, which will put us all on a better economy overall anyway. All right. Please no UBI. I guarantee you it's going to happen. It's like it's almost inevitable. Like they're going to have to produce a consumer at some point down in the lower portion, because no matter how hard you go to work, it's not like you're going to have enough money to go and consume. So they're just going to be like, okay, well, here's a bunch of UBI, go consume, you know? All right, the burden to prevent societal breakdown and rioting is probably on the property owner or upper 20%, and it's their best interest to keep everyone else feed and housed in one way or another. Yeah, and that's really where I think it's going to end up being, is that most people are going to end up living in apartments or grouping up into, multi-generational homes, like many people meant multi-generations in a home. Like, I find that's probably going to end up being a lot more of the case going into the future. And you just think about it, like, all you have to do is just kind of watch areas such as mine, like here in Astoria, and just kind of look at what it is that the people are experiencing here. Now, for a lot of times, you're going to find like areas like this are unique in the sense that it's not everybody's going to have like the type of demographics that we have going on here. But I don't think it's necessarily the demographics is what we should look at. It's the money that's coming in, right? How that new money comes into the system here in our area, and then what ends up taking place from it. Now, you can really look at all kinds of desires that come from the property owners around here, which is one of the reasons why we have such a growing hospital district, right? Hospital, retirement community, right? Like kind of hand in hand, right? Okay, so that kind of makes a lot of sense when you have this kind of new money that comes in. But what happened to the property prices around here? Well, they're off the charts. You know what else seems to be really interesting around here is there's a lot of new cars, right? Well, that also makes sense for the property owners around here who have the money, who would probably rather drive a newer car, especially if you're a retired individual, where buying a new car or having a new car is a much easier capability on your fixed income that can afford it, especially if you have a decent retirement. If you're moving to Astoria because you're looking to retire here, you probably have the money to do it. So this makes it all reasonable on why it's so expensive and why everything around here seems to be difficult. Knowing that to be the case, like, this is not exactly the place that I would go to say, okay, I'm going to figure out my industriousness here, right? It would be like if you were industrious already, like, this would probably be a place that you would want to try and make it if you like the area and you like the idea of it. If you're retired and you have a huge pension and you got all kinds of money, yeah, this is definitely going to be the place you would want to go to, right? Because this is where it is. This is where all those people are. So knowing that to be the case, you just go to the areas in which that are going to be in the condition in which that you are looking for. It's not going to be the same everywhere for everyone, but understanding the Cantillon effect and how this plays out is going to be very, very crucial to your strategy on how it is that you handle yourself. Man, I'm just really babbling here. All right, 259 people and 130 likes. I'm loving it. You guys just keep hitting that thing. All right, sell some stuff to old people. You are also can't own anything or be wealthy. It's hardship or will come after you. Huh. Painful enough to allow for adoration, but not so painful that people will amass and try to overthrow the powers that be. When it takes 50% of your income to buy food, then you'll riot. That's when people will lose it. They've already kind of done study. I don't know where this came from, but I don't know. I'm sure Grok could tell you. But anyway, it's about 50%. Once your 50% of your income goes to buying food, generally you lose your mind, right? You'll just like, that's it, I give up. And you'll just go and riot. You'll just like, fine. It's like I might as well just die anyway. And so they'll flip out when that happens. Here in the United States, I don't think that's going to necessarily be the case. Like, the United States, for one, produces a lot of food. All right. Now, we don't produce all the variety of food that we want, but we can produce a lot to eat. And that's kind of the key component to our survival here in the United States is that we have a huge agricultural, you know, farm industry that is incredibly abundant. Now, will that last forever? No. If the Cantillon effect continues to take place the way I assume it will, we will find that ever increasing amounts of the farmland will get deployed towards something that has a bigger return to it, like rental properties or something like that. Here you think about it, if you're a landowner and you've got all this farmland and you're producing like you're growing carrots, right? But now your carrots don't do very well and somebody else says, "Hey, you know what? I'm just going to make something up, grow beets, and I can make a lot of money off of your land growing beets." And it was like, hey, you want to rent the land? Fine, right? You rent the land, you get, some money off of it. This guy's growing beets. It's awesome. But then somebody else shows up and says, hey, you're all farming is great, but I could take this land, put a development on it, and I could like absolutely like do 100 times more money than you're making on your farm. So what do you want to do? You want to get a return on investment on renting it out to a beet farmer, or do we want to build some houses on here and make some serious cash? Right. And so, since the people who are buying the house can buy the food from a foreign producer, who is it that's really participating here within this economy? Right. Like back in the day when you were producing, being in the manufacturing, production, savings kind of position, you could trade your time and effort and energy for what that of a beet farmer could do. But now the beet farmer doesn't really make enough money, so he doesn't get to farm. New money pours in to somebody else who then is able to then buy the beets from some other producer out here. See, the thing is eventually going to happen is that it doesn't even matter, like even with your like Social Security. The Social Security payment will always be there. This is where I think a lot of times people get really upset in the idea of like, oh man, they're going to take your Social Security away. And it's like they're very doubtful, right? Very doubtful they'll take your Social Security away. Every single debt that the United States has will definitely get paid. Zero chance of default. Zero, because we have a printing press to do it. This is the point, right? Zero chance of default. No way will we ever do that. However, the benefits from the payments of those debts, meaning the bonds, like these bonds that we were talking about earlier, when those things go to get paid and you get your interest payment after clipping your coupons and you get your face value back and you go down to go buy something with it and you can't because we don't produce the real goods and services here in this country. So you take your bond down to go buy something and it doesn't even buy a loaf. It might be $100 face value with $10 coupons that you have completely torn off and cashed in, and the entire thing still won't buy you a loaf of bread. But you got paid. You got the money, but the money doesn't buy you anything because you can't guarantee the purchasing power of that. But you can guarantee that it'll get paid. No chance of default. Right. And this is really where the problem is because you can't guarantee that it's going to buy anything because we can't guarantee that we're going to be able to produce the real goods and services here in this nation. See, if you could guarantee that you could produce the real goods and services, then you can guarantee that the bond would be able to buy them. But you can't guarantee that the bond will be able to buy those goods and services if you don't produce the real goods and services. And this is the unfortunate consequences of where we're headed to. People are like, oh man, well, how are they ever going to pay the bonds? It's like, don't worry about paying the bonds. Be worried about the bonds being able to pay you anything of benefit. That's the scary part, right? For me, it was just like, I look at Social Security, it was like, if I could get Social Security up to a point in which that it can make my house payment, that would be perfect, because I have to make a house payment for the rest of my life if I don't have somebody else move in here and rent it out. So if I do happen to get Social Security, it would be perfect if it was making the house payment for it. Since I don't plan on getting Social Security, that would be an even trade. That would just be awesome. It'd be like, there you go, man, perfect. Right? And then I get the renter in there and I make all that much money off of it. All right, moving on. 141 people are continuing to hit that like button. Thank you so much. What else do we want to break down here? California grows most of the food that we actually want to eat, unless, of course, you want government tofu. All the corn in the Midwest goes animal and ethanol. Kind of vicious cycle. It really is. There are winners and losers in the money printer go burr game. Truth is brutal. It really is, right? And that's the thing. Like, I am never going to sugarcoat it for you guys. I'm always going to hit you with the hard stuff, and I'm not going to be like, all dancing around and try and make it all like, awesome for you guys to internalize. If you don't, you got to take it. I mean, some people really need it like delivered softly. Like, here, let me just really massage the situation a little bit and just like, here, let me deliver it very carefully for you. And I don't know, like, I can't do it, right? I'm not going to give you like a very careful presentation of what it is that we're facing. This is serious shit and it can't be taken lightly, right? I mean, you gotta take it seriously. And so that's the way I try to deliver it. I try to be very serious about it and very, very, in my opinion, very accurate, and then also very consistent. Like, if I'm going to have a very consistent channel here, then I have to be that way throughout the years, throughout the months, throughout this time. And I really feel like I've done that. Like, I am definitely somebody who is trying to be consistent with not only the information, but with my theory, and not just change my theory at the whim of, a political, you know, individual out there spouting off something, and all of a sudden I have this huge change to my theories or something. No, my theories go way deeper than that. And that's why sometimes for a lot of people they're difficult to hear. Simon, what's the effect of wealthy hoarding money? Does it slow down inflation since wealth is hoarding, concentrated by wealth minority? If Elon gave away his money, would it just cause inflation? Yeah, absolutely it would. But you have to understand that if Elon gave his money away, like if he went around to all the poor people out there and he was just like, oh, here you go, I'm going to distribute all my wealth evenly to all you people, right? Many of them would be I don't know how much that would work out to. It's probably not that much anyway. But even if he did, let's just assume like it's a whole bunch of money, right? And he just gave it all. It's like, here you guys go. I don't want to be rich anymore. Boom, you can have it, right? I'm stepping away, and shut down shop, sell it all off, whatever you want to, however you want to say it. I'm giving it all away, right? And then the people end up with that, and they're like, "Woo, got this Elon check," right? And they're super stoked to have their Elon check. Now they take this check, right, and they're going to do something with it. What is it that they're going to do? What is it they're going to do with it? Are they smart already to the point that they would be investing it? Because if they are, then they probably would have already done that. And they're probably not caring whether or not they got an Elon check or not, because they're figuring out how to acquire assets to begin with. The people who are going to be super excited about it are the people who don't have any money. Now, why are they going to be excited about this money? Are they going to be paying off their debt and then using their extra to acquire cash flowing assets? Is that why they're excited? Or are they excited because they get to spend that money into the economy? Right? Most likely they're excited because they get to spend it into the economy. Otherwise, they probably wouldn't be that excited about it at all, and it would just go right into the rest of their wealth accumulation that they are doing. So if they are really excited about it, most likely they're planning on spending it. And if they spend it, it's going to go right to some other rich individual that's not Elon. It'll go to somebody else who's rich, because you have to think, if the poor don't have it, who does? If the poor don't have it, who does? Like, if you were given money and you didn't keep it, and you don't know how to keep it, and you've never been able to keep it, you're probably not going to keep it going into the future either. So even though you're like, oh no, I held on to it for a whole 6 months, where is it? Where did it go? Did you put it into cash flowing assets? Did you pay off your debts? Did you figure out how to start a business? Did you lever up your skills? Did you do any of that stuff? Or did you nickel and dime it away until it was gone? And if you did, where do you think it went? If you don't have it, who does? The reason why we face the situation we have is not one that can be fixed, but one that has evolved into what it is. Ever increasing amounts of debt and debt issuance is going to concentrate to the top, and it's going to separate the rich from the poor. If all those rich individuals who concentrated all that money decided that they were going to relinquish it, it would destroy this economy. The fact that they concentrate it and hold on to it is the only reason why this whole economy is able to continue to function. Why the transactions are able to even buy anything. If that money was out there actually chasing the goods and services, it would all be over. The fact that it has concentrated into the hands of a few is literally what holds the system together. I don't like it. It's the way it is. I can't change it. I wish I could. I'm not going to. I have to figure out what it is that I need to do, and everybody else can too. And if you want to try and figure out a plan to destroy the powers that be and figure out a way that we can establish a much better society and work real hard at doing all that other stuff, that's a conspiratorial mindset that is going to send you into the abyss. I've already been down that road. No, thank you. Instead, I'm not taking on the if you can't beat them, join them. That's your interpretation of it. My interpretation of it is the Cantillon effect that says if you have new money that pours into the system, the people who have first access to that money are going to be able to spend it at face value. If they spend it at face value and it trickles into the system, the people at the end of the line are going to suffer the consequences from that because their day jobs are not going to be able to keep up with the fact that the prices have all increased. That's the Cantillon effect recognized from hundreds of years ago from a guy who was recognizing the economic force from hundreds of years before him. To think that that's going to change is very inaccurate. I understand how that works, and I'm not trying to change it. I'm trying to position myself so it's not like joining them because I can't beat them or something. That's not the case. It's understanding that this economic force is going to require you to do something beyond your day job, and that is to get into asset allocation. If you don't, you will be left behind. I'm sorry. There's no other way to look at it. And I am sorry for it because I don't like the idea behind it. And if you're not doing it and you don't want to do it and you're too scared to do it, it's going to be a real hell to pay here in the future if you're sitting in a position where you don't have any assets, you don't have any cash flow, and you're trying to figure out how come your day job is still not enough to pay the bills. Good times, right? I mean, I don't know. Like, I don't know what else to offer up to people. Like, I mean, let's team up, let's do a project, let's figure it out, man. You want to make videos together? I don't know. Like, I mean, I like making videos, I like talking, I like sharing economic information, I like doing research and study and doing all those other kind of things. I don't know what other people like to do. Let's make TV shows, let's write books, let's write articles. Other people want to build houses, other people want to start businesses, some people just want to invest. Everybody's going to have to figure out their way. And I don't know what it is that you need. Like, I can't tell you how you step up and do what it is that you got to do, but I can tell you how these underlying economic forces are playing out so that you can figure out where it is in this economy and where it is that you need to position yourself. Like, once you do that, it becomes a whole lot easier. Yeah. I mean, you know who's really kicking it? And I know I brag him up all the time, is All Nighter, right? All Nighter is using sweat equity to get into real estate for the most part. Like, he has to invest some money into it, but for the most part, it's his presence that he is using to acquire the property. Now, that is brilliant. People who say, man, money is the problem, money is the obstacle, it's what's holding me back, I can't do it because I don't have the money to do it. It was just like, that's your own problem. That's your problem, your wall, your issue, that's your issue. Money isn't the problem, it's your issue that's the problem. I mean, if there's anybody who's proven that you don't need money, it's All Nighter right now. Right? I mean, don't get me wrong, it takes probably gas money and food money and stuff like that to make this thing happen. But as far as what it is that he's doing to get into this property, I think anybody could do if you just picked up the skills and leveled up your skills and leveled up your network and figured out what it is that you can offer to be helpful and useful, and anybody can get into this game. It's amazing to watch it happen. I mean, tell me you can't do it. Yeah, and like, tell me again how you can't do it. It's just like, um, priests tread tightly. lightly around that topic, yelling. What are we talking about? All right. The work is value. Well, what is it? The work is a value. Will work not be valued in the future? Will work not be valued in the future? Real work? I'm not sure. Okay. I'm looking to buy a house on 15 acres, live in the house while I build my own in the back acres and rent out the house. Yeah, see, that's a plan. That's a great plan. It's an excellent plan to go through that. In fact, if it was me and it was 15 acres, you know what I would do? Personally, is I would buy that property, rent out the house, find a little trailer, manufactured trailer, build a pole barn, right, and back that trailer up into the pole barn so it was all protected, and I would be all up enclosed in there, and it'd be nice and awesome, and I would make it cool. And then I would build my absolute dream home after I have accumulated all the materials and filled that barn up so that it was 100% paid for, all the materials, the day that I got it completed. That's like the path that I would go down if I had that ability. That way you could sit there on the property, let the house pay for the property, you live in the barn, accumulate all your materials, work the side hustles, work whatever it is that you're doing, accumulate the materials, put that house together, and then, man, talk about a position that you could use after that. You could either just live there and have it and continue to let the renter, pay the property or whatever. You just live there for free, or you rent that one out too and go do the whole thing over again someplace else, or even on that property. Just keep building houses there. Simon, watch your stuff all the time. Very informative. Wondering what you think about AI and its impact on the overall economy. Andrew, I'm not scared of AI. I think AI is a wonderful experience coming into the future. Most people are scared of it, thinking they're going to lose their job. And to me, I look at it's a convenience. That's wealth. If you have access to a convenience, you have access to wealth. AI is wealth. I mean, just use it for wealth. Food, conveniences, and pleasures of life. If you have access to food and you have access to conveniences and you have access to the pleasures of life, you have access to wealth. And it doesn't necessarily require money to do that. So if you can position yourself in a way that acquires those things, then you are acquiring wealth. And now some people have to get very creative, and some people have to have a whole lot of abundance in their life in order to make it happen. But for the most part, when I look at AI, I think about how much conveniences and how awesome it's going to be to free up my time. Because my time I can't get back. And if AI can give me a bunch of time that I wouldn't have to waste going for a particular thing or something, and it can give us back our time, think about how wealthy that is. Like, time, you can't, like, it's the most valuable thing in the entire world. Why would you, like, Dad, I mean, shit, take my job away from me and give me my time. And if I can have the food, conveniences, and pleasures of life, let's go for it, right? Because I don't have a meaning behind it that says, hey, it's going to be damaging and destroying and all that other stuff. To me, I think technology and all the advances in it are awesome and do nothing but make our life better, right? In a lot of ways, it's destructive and intrusive and personally infringing and stuff like that. But really, for the grander thing, it's much better, right? That is, life in society is much better with all the technologies. I mean, think about it. We're having this great conversation here in the middle of the night on a cell phone in the middle of, in the middle of my driveway. This is crazy. This is awesome to have. We don't have to accumulate at a conference center to do this. All right. Geo, I was 38 when I started. You're doing real well. Compare yourself to only yourself. Compare. There, sorry. Compare yourself to only yourself. Absolutely. Yeah. All right. 300K will get you a great shed. Being a landlord takes all your time. Not if you do it right. It can take time in the earlier part, this is where they, like, a lot of real estate investors call it the suck period, where you have to put in a lot of time, effort, and energy into getting a property up to the point where the cash flow starts coming in. And for a lot of individuals, like, who had these, like, big dreams of, like, being an instant, like, cash flow millionaire because of their of their properties, they have to understand like there is a like growing period within it, just like any business. Like anybody who says, "Man, my business from day one kicked ass and I was awesome at it, and I made $1 million in the first year," like that's like okay, maybe some people do that, but for the most part, people don't really do that. Right? They have to put in time, effort, and energy and build it up brick by brick till they eventually get it to a position in which that it is actually a benefit to them. And that is the same thing with real estate. Like, you have to build it up till you get to a cash flow position. All right. Yeah, they are going to give you the luxuries while have AI. I've been thinking about making music, shirts, games, and anime with AI. See, a lot of people ask me, and it was just like, they're like, how come you don't use AI to do all kinds of stuff? Like, I had guys who are like, dude, I can use AI to, edit videos and stuff. And I'm like, I'm not, I understand that some people could probably generate some really good, entertaining stuff with AI, and it would probably be a lot of fun to watch. But I know that the authenticity of this channel coming from doing live streams, live presentations, off the cuff answering, like no rehearsals whatsoever, the reality that this channel brings is not something that AI can do. Now, with that authenticity, that is the value that I have to offer. And if I mix AI into that, I destroy that. In fact, I'm gonna bet going into the future that people who produce content like this are gonna be more respected than anybody who does edits. In fact, it's already kind of getting that way. It's one of the reasons why my channel I think is popular is because I don't do edits. Anybody can sit here and rehearse. I mean, I can act it out too. I can do the perfect lines and edit all those things together and put all these fancy charts there and do, green screen and everything else and try and formulate something that's going to be very entertaining, or I can bring you something that is hardcore real. What do you want? Right? Now, I know the people who are here want the hardcore realism from it. That's why they're here to begin with. And other people essentially need to have some sugar coated dancing, flashing lights and all this really coolness that is brought behind it, but is essentially just superficial. So I don't know what kind of information they're getting from that. Uh, respect respected and monetized. People will be so starved for humanity and it'll come through in content. Yeah. Only a matter of time. Uh, the content is raw and information is real world examples. Thank you very much. I really appreciate that. Because I do try to bring you guys the realism of the situation we now face, and not everybody's sitting in the same position. So it's really just a matter of like hearing each in our own stories. It's kind of like, a lot of this is literally hearing the stories of other people. Like, how is it that they were able to make it? Like when we at the end of it and we all sat around in this big room, right, and we were all talking about how it is that we got to that room, nobody is going to be telling a story that is the same as anybody else. Like literally it will not even be close. Like every single person will have a situation in which that had a trigger moment, an aha thing, or a particular event or whatever that changed the course of their outcome that led them to that room, to that table. And nobody's going to have the same one. And that's where I find like this information is most important to the individual who is trying to internalize it for themselves, because most people are not trying to do that for you. They're trying to tell you, like, I'm not necessarily trying to tell you how to think. I'm trying to tell you where it is that these economic forces are playing out so that when you are thinking about it, you would recognize some of those things. I mean, however you want to believe politically, go for it, man. Like, I am not going to tell you how to believe politically. I can care less which way do you vote. I really can care less. It's not up to me to care how you vote. But if you want to look at these underlying economic forces so that you have a better understanding of why you are voting the way you are doing, that's what I want to share with you. And I totally want to share that with you. Like, I want to give you as much of that as I can possibly give you. In fact, I am giving that for you for free right now at the UE University. If you just look down in the link, there's the school.com where you can go and check out the information that I have provided for free for the next for next few days, but it's a 7-day free trial. And I encourage everybody to go do this. Like, I mean, why? Like, it's absolutely free for the taking, right? Like 7-day free trial for you to go and just take all that information, and I want you to have it. Like, I've been trying to give it away as much as I can here on YouTube. I've done it so many times, right? I'll go over the speeches, I'll deliver the links, I will put it down there, I'll go over it over and over and over again, right? So here it is. It's for you for free right now for the taking. And it's awesome because all the PDFs that are down there, like once you get into the UE University, once you're part of the membership, go up to the tab that says classrooms. Then you're going to find the credible threat theory. Inside the credible threat theory, there's quite a few sections. If you go through the down to the bottom of those sections, you will find sources, right? The resources down at the bottom. Click on those. You will find the PDF files that I have shared with the highlighted marks on those speeches so that you can internalize all that information for yourself. And I really, really hope you take it. Like, take it. Right? I've been trying to force feed it into the people. I've been trying to shove it out there. Now, at this point, I just need them to take it because I'm going to turn it off. Right? I'm not going to turn it off completely. You're just going to have to pay for it after this. So I'm trying to get it out there for everybody to have, you know? You're always on and in the front of things somehow. Much thanks. Yeah, well, I appreciate it. Well, here's the thing. I have done so much study to try and formulate another video, the next video, to try and come up with an idea of it. And as I was making these videos, people kept saying, well, what about this? What about this? What about this? And I had to make videos to address these things. And I started studying so much to cover all these different topics that I literally formed an opinion on everything. Like, there's nothing that I don't have an opinion on anymore. And because I had done so much research through the monetary policy and the economic theories that I have tried to share with the people, that I can really, like, to be honest, dial it in pretty tight, on what it is that I am viewing and seeing. There's stuff that, I mean, I get it. There's things out there that I probably don't communicate around about or talk a lot about, and people wish I did. But I'm talking about what I feel is important to the things that I'm seeing. And I'm trying to share the economic forces that are playing out that are then relating to the things that I'm seeing, mainly within like the lumber industry and the building industry. Like, that's things that I'm in. Those are the industries I'm in. If somebody was in the automotive and car sales or something, like, they would have a totally different view with this economic information, way different from what I have, right? Because I'm not into car sales. What do I know about car sales, right? I'm a lumber dealer, you know? All right. I got to remember to go to my school app when I'm in the office. Yeah, and join in on the conversations. Let's make it the place to hang out to really get this. Simon says, good saying. All right. You're always, we already read that. Okay. Will everyone using AI for investing, do you think the better opportunities will be capitalized on them by the people not moving with the herd of AI investors? I would imagine that if you are doing your investing independent of that of the herd, you're probably going to do much better than those who are joining the herd. Like, lemmings fall off the cliff, right? They'll just chase each other right off the damn cliff. So I have a tendency to not follow the herd. In fact, I have a tendency to, like, kind of step away from the herd and then view the herd from a distance. Like, what is the herd looking at? What are they after? It's just like, oh man, they really got into some good stuff over there. Shit, I could have been in that, right? And then you watch them jump off a cliff and you're like, oh, I'm glad I wasn't there, right? Because you don't, like, the herd is may or may not make the right decision. I mean, they very well could, especially if they all rush into something and drive the prices up because they're trying to crash somebody who had shorted position. Like that could really drive some prices up there, and people can make a lot of money. And especially if you're like in a pump and dump kind of scheme, it can really play out one way or the other. I'm like I have a tendency that's like, man, I'm gonna make my own decisions based on my own ideas of what it is that's happening, and I don't really rely on anybody else's help for that. I don't. I here's what I've been looking for help for is to try and understand how to sell covered options and puts, call options and puts. So if I could figure out somebody who can mentor me on that one, so I know that I can figure out the things that I know I don't know about it, that would be great, right? Because that's kind of like the direction that I think I would want to take right now is selling some put options, right? Or call options, whatever. In doing like the wheel strategy, to me, that seems like kind of like my like kind of right down my game, man. Like that's what I would really like to try and do. But again, like I don't know, like just as if you're getting into investing in real estate or something, you would want a decent mentor to say, am I screwing this up? What's going on here? What am I missing something here? And it would be nice to have a mentor go, oh boy, you were about ready to. Good thing you talked to me. If you don't have that, like, what do? You know, it's like, well, I guess I got to go make some mistakes and then learn my lessons. And that's really where the fear starts to step up. You know, you can do it with something small. Like I was thinking about doing some small stuff, like with maybe Ford Motor Company. You know, but you don't make like even if you did the smallest option, it's still like, it's going to be like 15, $1,600 to put up, but still like that's kind of a small price to pay for the learning lesson that you would get from it. Yeah, I don't know. That's me personally thinking. Alrighty. Can you call Gammon and get some pointers? I probably could, but I'm telling like here's the thing. When you have these guys at your ability to give him like if I called up George Gammon, he would and I said, "Hey man, I would like to talk to you for a few minutes." He would give me the time, right? I'm sure of it. Like I might have to wait for it, but I'm sure he would give me the time if I asked him for that. If I asked him for time, it better be damn serious. Not just, "Hey dude, I got this idea. I was just running it across you, see what you think about it." I'm not going to waste his time like that. Like, I gotta go figure it out. When I come to him, I want it to be so serious on such a level that he is going to have to take a consideration into it, not be like, "Oh, okay, man, here, let me try and guide you in the right direction," or whatever. Like I'm not gonna give him that kind of thing. Like when I go to him, I'm gonna go to him with something serious. Like I got an idea, I want your help. Right? That kind of thing. So, you use your network in the most valuable, like you consider it for the value that it is. And that is probably one of the most valuable things I have is something like that. To have Ken McElroy in my list of contacts, to have Jason Hartman in my list of contacts, to have Mark Moss in my list of contacts, to have Lynn Alden in my list of contacts, and to have Lynette Zhang in my list of contacts, right? To have met G. Edward Griffin, to have met, all these wonderful people out there and to know them, like to not necessarily know them like, hey man, how's the cousins doing or something like I don't know them like that, but to know who they are and they know who I am. If I was to call on them, I want it to be the absolute serious deal, not one that I'm screwing up, right? Because there's a lot of value inside of that that I have been able to acquire. And if it comes time to use it, I'm going to make sure that it's the full use of it, not just, a partial, hey man, let me give you a question. All right. Do you ever watch nature shows? So in nature, there's protection in the herd, and the one gazelle that accidentally goes the wrong way or the lion can separate from the herd is dinner. I have a hard time hiring someone who is even experienced to operate my equipment. There is no way I could trust an AI robot to operate and drive my vehicles to my clients. I don't see how AI would help me. And people should treat everyone's time like it's so seriously. Yeah, and I tell you what, like I had a big lesson that I learned from that with Peter Schiff because I asked him for an interview for the channel here, I don't know, 5 years ago or whatever it was. And typically, like I was doing 45-minute interviews for my channel. I just talk to the people for like 45 minutes or so. And I told him, I said, hey, I'd like to talk for like an hour. And I kid you not, like the way that Peter reacted to it, it almost shocked me. I was just like, I almost apologized for asking for it. But he says, an hour? We should have been started already. It could have been 10 minutes into this. Right. And I'm like, oh man, like I was taken back by it. I'm like, oh crap, I pissed him off. Right. I mean, and then it's like just almost immediately it dawned on me and I'm like, yeah, I guess like a hour's like, probably $100,000 of this dude's time. Like, I don't even know how much it would be worth to him. And I didn't even like, to me, like, it's an hour, what is an hour out of my day, right? But an hour of Peter Schiff's day, I mean, that's a lot. That's asking a lot. Like I asked him for a lot by asking him for an entire hour. And it dawned on me afterwards that that's what I had done. I'm like, oh crap, I just asked him for a lot, and I didn't even realize what I had done, because I'm just like typical interviews, right? I'm just like all the rest of them, like, hey, we go for like an hour, and it is like, and I'm like, oh crap. So as I'm doing the interview, which is going great, like Peter gave me probably the best interview that I have ever done on this channel. I haven't done interviews for a really long time, but when I was doing them, Peter gave me like the best interview out of all the interviewees that I've ever done. And I just remember like it was getting close to that time in which that because I was doing it on my lunch break. This is too, right? I mean, here I've got a day job. I'm taking an hour off of my day job so that I can interview Peter Schiff. This is what's so funny about it, right? And so my time is coming up, right? I got to go back to work. And I'm trying to end the interview and I could see Peter sees that there's like 10 more minutes left. Like we're at like 50 minutes into this interview. And I can see that he's like realizing there's 10 more minutes left. He just starts talking and doesn't stop for like 10 minutes and completes the rest of the hour and then says, okay, there you go. And thanks me. And I thank him. And we did the whole outro thing. And then it was over. And I thought to myself, that was cool as hell. Like he totally gave it to me, did a quality interview, and then actually completed the hour because that's what I had asked for. And so he went ahead and just finished that off, even though I tried to cut it short. I mean, I when I thought about that later, I'm like, man, if I ever ask anybody for their time again, I'm gonna make sure that I use it completely, like, and use it and seriously and authentically and real, and not just be superficial, like, hey, let's talk. So that's, something that I learned, quite a while back that these guys are there. I know they are. Like they've already said it, man. Anytime you ever need anything, you let me know. And so when I think that I need something, I'll give them a call. Until then, I'm going to figure out what it is that I need until I can't figure it out anymore. And when I need it, then I'll ask. All right, what time is it, guys? Are we done here? How long are we? God, 174 likes. I love it, man. All right, I tell you what, if you can get it up to 200 likes here in the next 10 minutes, we'll stick around for a little longer. Otherwise, we're going to call it at the 2-hour mark. This has been an excellent live stream. So much fun. Had quite a few people who have joined in on it, and I think we've really broke down a lot of stuff that people need to internalize, especially when it comes to how the new money comes into the system. I mean, that first half hour of this video or so, I think was really very telling of how it is that we are facing the inequality and why it is that we're facing it. Crazy how during the live stream, the sun set for you, but for me, it already set 3 hours ago. Yeah, and what's cool about it is as if you watch this channel for the next, like, say 4 months or so, what you're going to find is that the daylight is going to stay later and later and later, and then pretty soon it's going to be still daylight at like 10 o'clock at night, right? You're still going to see a little bit of daylight out there. And then if we were to start a live stream at 4 o'clock in the morning, it would be daylight again at 4 in the morning. Now, it's cool because like how the earth rotates and where the sun is positioned to it. Where all nighter goes up in Alaska, it stays day like all day long, right? It only gets like a little bit of darkness throughout the day. And that's kind of fun to watch. And everybody says it, man. And I was just like, dude, it's still like late out or light out where you're at. It's already dark and been dark for a while. And this is cool. The farther up north you get, the more you get to experience that sort of thing. So yeah, you watch it here on this channel over the next 4 months. Like even now, what time is it? Yeah, it's like 7:30 now, so it would still be like bright as hell out here in a few months. Yeah. Did Cantillon write about the sun moon cycles too? I don't know. I don't remember reading anything about that. Simon, good meeting you today, man. Oh, this is Joey. Right on, Joey. Yeah, it was really cool meeting you. Curious, what's your thoughts on par lumber having massive layoffs? Is this a sign of struggling companies, or are lumber yards really struggling out there? Uh, Joey, I don't want to expose you too much out there. I really appreciate you joining the channel today, man, and it was really cool meeting you. Um, and yeah, if you want my personal opinion on this, I think this is the struggling economy, struggling lumberyard, struggling building industry, and it's a struggling industry altogether. The mill curtailments over the last few years, slowing down the inventory, and really the prices being under that 600 per thousand. Really the mills don't want to operate under 550. So this 550 to 600 per thousand is not doing it. It's not enough to kick those mills into gear to say, yeah, there's a lot out there that we can then produce to sell when you don't have the demand for it. So without the demand and without the prices, the mills are just like, hey, we're just not into it. And although there's been a little bit more production lately, like I talked to my logging buddies who are in the area, and they said, yeah, it's picked up some. It's still pretty slow. Like one of the guys says that he has, like his operation that he works for, they have 3 yarders, and 2 of them are in operation right now with some curtailment that's happening. Or I'm sorry, some limitation at the mills, but they are asking for it. Like they are like, hey, send it on in. So there's at least some production taking place, but it's still quite limited, in my opinion, on that. So until we actually see the home buyer traffic, sorry, the home builder sentiment on buyer traffic, like this is the key indicator that I'm kind of looking at as far as like the reversal of the trend is that when home builder sentiment on prospective buyer traffic is that one position inside of the home builder sentiment. Like if you were to look up home builder sentiment from the National Home Builders Association, that that particular segment, the home builder sentiment on buyer traffic, is like at 22. It is dropping. And with that falling, they're not going to be excited about new homes. They're not going to be excited about getting into production of new construction, new starts, permit issuance, stuff like that, if they don't have the prospective buyer there. Like even if the buyer was there, but they don't feel it, then they're still not going to start. They want to be able to feel it. They want to have that sentiment increasing towards the positive. And so knowing that it's dropped down to 22, it would have to start rising and rising significantly before we would actually start seeing any kind of reversal inside of the economy, inside of in this particular industry when it comes to new starts and activity happening. You would have to see that perspective on buyer traffic moving more towards the positive. Does that kind of make sense? And at least that's what I'm seeing out there right now. Once I see that moving, and it doesn't even have to go positive. It just has to be significantly moving towards positive. So like right now it's at 22. It jumps up to 30, jumps up to 35, goes to 40. I'm thinking, oh man, this might be it. And at that point, I think we would probably start seeing a reversal to the activity. And then in that turn, you would see the demand pick up. And with not a lot of inventory out there, and with the mills in the curtailment position that they have been over the last few years, I can't imagine that this industry would be able to handle any kind of significant rise in demand. So basically, inelastic demand would start taking place. If you have a bunch of people who sign contracts, those contracts would then come into fruition saying, we need to start this thing. If you start a project and you can't find wood, what ends up happening, right? Prices start shooting through the roof. So this is really where I think there's a setup taking place in which that if there was any kind of increase in that home builder demand for lumber, and it was significant, I just don't feel that there's a lot out there and the prices would shoot up, right? Especially with the mills and the curtailment that they have been. Like if they've been in massive production over the last few years, and I would think differently, but it's the curtailment that they have been in over the last few years, the shutdowns, the paper mill shutdowns, the all of it. I mean, it's all across the nation, all up in Canada too. So it's not like it's a hidden secret or anything. So with that happening, I only assume like we're sitting in a position that could take a huge, huge, brutal beating if there was ever an increase in that demand coming from the home builders. Like, could we see another? Like, I don't think it would rise to like the 1,700 per thousand again. Like, I think that was a little extreme. But seeing it jump back up over to 1,000 per thousand might not be too unheard of. Like, it jumps up to 800 per thousand. I bet you the mills would love it, right? They would just be pumping out a lot of lumber at that. They'd be asking for trees all over the place in order to make that lumber. And if it was continuous for whatever reason, right? Like how could it ever fall if you just don't ever have it coming in from Canada? If you have the mills that were shut down, unless you like fire those things back up again, if they were dismantled, I mean, who knows how damaging this is going to be the longer it goes on. Yeah, I don't know. It's hard to say. Thanks for being here, Joey, man. I really appreciate that. All right. Brad Jones, 1610 with the $2. Thank you so much for the $2 super sticker. Very cool of you. All right. Da, 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 da. All right. I've been looking to buying my own mill that is semi-mobile just so I can have the ability to cut boards in the future. Yeah, and you have to remember, Cole, you can mill your own boards, but then you still have to have them graded if you're going to use them to build a house, like at least one that's going to be sold or anything. So if you're like looking to mill up your own lumber, you have to mill up a particular grade of lumber in order for it to be used for the actual construction. Like you can make up all the stuff for your trim and all the rest of the stuff, but the actual like studs and the walls and the beams and all that other stuff, you that all has to be graded and suitable for that particular purpose. Which is totally doable. You can do it. Yeah. All right. You talk about future contracts is more complicated, but expiration even is key. Yeah, and you also have to understand that the futures, when it comes to lumber, are just merely a guideline comparatively to the cash price that is actually being paid at the mill at the moment of purchase, right? So cash futures it's really kind of giving you a general idea on the direction in which that things are going, but it doesn't give you a real clear view of the actual activity that is happening within the market itself, because there's so many mills, so many operations, so many different directions in which that lumber can be purchased and moved, that looking at the futures contract is really just looking at a very narrow, thin portion of what is actually happening within the entire industry itself. But it is a very good indicator. It can give you a great idea. But people who are just following lumber futures are probably going to miss it anyway because it's not enough information, right? It's just a piece of the entire picture that's out there. Understanding that lumber futures had changed a few years ago. There was a time when it used to be a handful of mills delivering to a central hub up in the British Columbia area, and now it has added rail cost and moves out to a central hub out in Chicago. So it's like, excuse me, future contracts had also changed from like into quarter of the size units. So or sort of the size, like it used to be 110,000 board feet, and now they're like quarter-sized units and you purchase them 4 at a time or something. I don't even remember how this exactly works. But anyway, it all kind of changed a few years ago. What I find interesting about that is that this added rail cost that is included in these future contracts going out to Chicago isn't really necessarily described when comparing it to the prices of before. So, like if you're looking at 2018 and you saw the lumber futures at 550 per thousand or 650 per thousand or whatever it was at, those didn't include that rail cost. So, if you remove the rail cost out of that futures, they're a lot less than what they are today, right? Than what they would be, what they are showing today. I don't know exactly how much that added rail cost is, but I know it adds something to that price. So really looking at it at 550 per thousand, it's less than that comparatively to the way it used to be. It's not a good industry. Like the industry is not doing well right now, that's for sure. At least in my opinion, it's not. And it seems to be that way across the nation when you think about the mill curtailments and shutdowns that have happened over the last few years. All right. What time is it? 2 o'clock. Oh, you guys got it up to 200. Oh my gosh, you did it. Oh, well, now what do? We stick around for another 10 minutes? I didn't think you guys were going to get it to 200 at 2 hours. You did it. Oh, that's awesome. All right. Well, let's stick around for just another little bit then. All right, Justin, you don't need psychedelics to pour slash finish or form better. Huh. But concrete is hard, so kudos and thank you for building America's foundation. Yeah, I've done a few foundations, some flat work. All right. 201, sorry, Justin, thanks. All right, it's the Kali Yoga. All right, all-nighter. The chat's going off the rails. Yeah, what's going on? All right. It knew housing wouldn't crash like 2008 because inflation became entrenched now. It's not going to crash like 2008 because back in 2008 we had something that was going on that's not taking place right now, and that was a lot of people, for one, who were acquiring loans that they should never have gotten, which was driving the prices up on properties that were never going to get paid back, right? So there was no way that that was going to last. But at the same time, because property values were moving up so quickly, there was a lot of new construction that was also happening at the same time. So not only did you have a whole bunch of new construction coming on the market, but you had a whole bunch of people who were acquiring loans that they should never have acquired. Those two things are not taking place right now. Like they are not happening, you know? And so when you have a lead up like the great financial crisis where there was a massive building and then massive amounts of people who were getting loans that they never should have gotten, that needs to be like considered when you have the issues that we are now facing today. Because for quite some time, people who were acquiring mortgages were only the highest qualified people. I know they wouldn't give me, they just gave me a loan back in 2008, 7. All right, here you go. Oh, you need a loan? Let me open up this Cracker Jack box. There you go. Loan for you. Right? Here's a loan. And it was no problem. I didn't even put any money down. It was like one of the easiest things that I had ever done. And then, right, everything went to hell. I lost my house. And then getting into this house took just about everything I could do to get into it. Like, it took everything I could do to get into it. The first one, it was no problem. It was like one of the easiest things I had ever done. Totally different scenario this time around. The science of getting more work done. Like number 191, thanks, Simon. All right. I can't believe you guys got it up to 200. You're awesome, man. We got 203 people watching with 204 likes. That is so cool. And Benny just joined in. Let's load. Is that what he says? Benny, bro, you made it, and I'm just about ready to close this damn stream down, even though you just got here, and I would love to keep it open for another hour. But yeah, we're going to be calling it quits here in just a few minutes. I really appreciate everybody joining in, though. Yeah, I'm sorry, man. Well, we'll hang out for 7 minutes. You got seven. But I really appreciate everybody who is joining in, everybody who is checking out that school community, right? The UE University has the credible threat theory with all the PDFs to all the speeches to all the highlighted marks to everything that I had used to come up with the credible threat theory. Actually, that's not true. There was a lot more that I used to come up with the credible threat theory, but this is the important stuff, right? This is the important things that you can look through. I could have probably put 100 documents into it, but I brought it down to about 20. Really, 12 of them is what you need, but there's about 20 documents there that if you go through that information, if you look at those documents that I have grabbed from the Federal Reserve, and pretty much most of them are from the Federal Reserve, and then downloaded those PDFs with the highlighted marks to say, hey, check out these parts of these speeches. And they are very telling. And once you kind of internalize that stuff, you're going to start seeing it too. You're going to be like, crap, they were out of ammo and they needed to raise that neutral interest rate. And once they got that neutral interest rate risen, the last thing they want to do is lose it, right? So this is really where we're at today, is to know that persistently high inflation is the name of the game. And that's exactly what they want and want to keep. And they want you to believe that we are going to have inflation that is secured at 2%. But right now, it's just very difficult. If they can maintain that forever, like, hey, we got 2% on the mind, but right now it's really difficult staying just slightly above that 2%. If they can maintain that forever, they would be right in line with their goal. Never once ever achieving the 2% target, but always just trying to get there, you know? All right. I need to upload a video tonight. Yes, go for it all nighter, man. Start uploading as much as you can. Once a day, a couple of times a week would be perfect. All right. And stay consistent with it. Keep going at it. All right. All nighter hider. I have a steer named Porter as well. He's on the list. uh, okay. G Ken 117. Here's something I'm going to give you an idea on. I don't typically read all caps comments. So if you type it all out in caps, then generally I just kind of pass by it. I'm going to read this one because I think you're really trying to just get my attention on it and not trying to like overwhelm the chat section. And I know for like a lot of other streams out there, like a one that's done in all caps is really directed towards, the host or whatever, but it's just not really how we operate here on this one. I'm not like trying to be offensive or offended or anything like that. That's not the case at all. But generally, if it's an all caps comment, I just pass by it. Why not short contract puts biggest lumber companies in stock market in United States and put options for December is easy contracts if you think lumber is going to drop is easy if you think lumber. Okay, great. Love it. Love the comment. Thank you very much for that. I really appreciate it. The problem with most of the lumber games out there is that they are very expensive contracts when you're talking 100 of them. So $25,000 out there, or, 20, even, $16,000 for, some of these contracts that are out there are a little too much for me to jump into the game with, right? In order to do anything kind of serious with it. That's why I was thinking Ford would be a great one to start with, just so I could learn the game to figure out what it is that I do and don't know about it. I could make money. I've made money using my knowledge. Remember Nail? Remember when I called that one out back in June? Called it out to the day. Holy crap, guys. I called it out on the day. Said, here, I'm going to buy some of this. You know what? Everybody told me I was crazy. They say you don't buy and hold a 3-time leveraged ETF. And I'm like, I know you don't. I am. Right? You don't do it. I do it. And I took that leveraged ETF and hiked tore its face off. I made a ton of money off of it. Not really. I made a great percentage off of it. And I didn't make a ton of money. I made a great percentage off of it. And if people had positioned themselves in that thing, there was an opportunity for them to more than double their money off of that. It was a great call. All right. And now I'm not one to go out there and share information on how to invest, because if I was to give you a call that was wrong, It's not my fault. I'm not an investor. I'm an economist. You're the investor. You're the one who takes the information, figures out where it is that you need to position yourself for it. Have I made money off it? Yeah, I sure did. That nail call, like, called it to the day. I couldn't believe it. Like, it's one thing to call it and say, like, hey, man, I think we're kind of near a bottom and you were within a week or two. And it was like, yeah, that was a pretty good call. I called it to the day. Holy crap. Right? I mean, it was pure luck, but still, you know? All right. Simon, any good income producing assets on the cheaper end or dividend stocks? The best bet. Okay. I'm not okay. JEPQ. Okay. That's one. I'm not telling you to buy it. I'm not saying anything else about it. You ask for something that pays. And what do you think as copper to invest in? Well, I think if you're in like the ETFs or something, but not the physical metal. Like the physical metal would be okay if you just want to have some for just the habit. But as far as like having it in your physical possession in order for like an investment kind of thing, I'm gonna take that down to the lesser and say no. For me personally, if I'm gonna have something in my physical possession, it's gonna be silver. It may be gold too, some gold too, but really it's silver. And silver that is recognizable, like silver eagles, silver maple leaves, stuff from the Sunshine Mint. These are these things that are easily recognizable that are going to be easy to turn over. Remember, like here just recently when when silver ran up to those highs, the refiners were like, nope, I ain't touching it. We ain't buying any of this stuff. And so the dealers themselves were like, well, if the refiners aren't buying silver, then we can't just go and buy all the silver that's available out there. Even though people are like, hey, I want to sell you my silver, they're like, sorry, the refiners aren't buying silver. I'm only going to buy what it is that I know I can sell to another customer, which is the most premium pieces. Like, again, American Silver Eagles, the Canadian Maple Leaves, Sunshine Mint, Philharmonics, these things that are recognizable that the customers are going to want to buy. So these are the things that the coin dealers are willing to deal with, even at those high prices, knowing that they can sell them off to another customer. But they may not buy your junk gold or your junk silver if the price is really extreme and the refiners are like, hey man, this is too extreme for us. We don't want to touch it. Then the coin dealers are going to be, or the silver dealers and the metal dealers are going to be the same way. They're like, hey, if they ain't buying it, we ain't buying it. We're only going to buy what those people are buying, and that's the customers who are coming in. So this is important to understand. Like, how is it that you're going to deal with your copper at that point? Like, you might be in a position in which that copper runs way up and it's been up for a long time, and you're like, you know what? I think I'm going to finally take that copper position. And you go and you take your copper down to the refiner, and they're able to get some money off of it. But are you looking for emergency purposes? Or are you looking for the money making aspect? Because if you're looking for emergency purposes, then you don't really care, right, about what it is that's going on. You're just going to stick it somewhere, and then you're going to wait for that day that it's like, crisis and, collapse of the economy or something. But if you're thinking, nah, I need to make some money off of this because I think copper is really going to go up in value, then you probably just want to get in the ETF, right? The ETF will be so much easier to get in and out of, so you might as well just stick with that and make the money off of it and not have to deal with the physical portion. Alrighty. Guys, this has been a lot of fun and I really enjoyed hanging out. Now that Benny's up in the house, I really want to stick it around. But Simon, I appreciate the free lifetime subscription. That said, I will buy a copy of the Cantillon effect upon release, of the Corona effect upon release. Please just send me a signed copy. That sounds wonderful. I appreciate you, Benny, man. I really do appreciate you being here, and All Nighter and Brody and Deplorable and Deja and Wayne and all these guys, Justin. I can't name all of them, right? mycology and botany. You guys, I just really appreciate all the times you've hung out here, shared your comments, shared your ideas. We gain this knowledge together. We push forward on what it is that we need to do. We share our encouragement with each other to make sure that we are uplifting and carrying on with what it is that we know is going to be the best appropriate position for ourselves, even if it's different for each other, right? Some people are going to have to do something that's different from their life, that's going to be different from yours. And even though you may not see it the same way, we still have to be encouraging of what it is that we're all doing out there so that we can all make it, right? We all need to figure out what it is that we need to do on our own, and not everybody's going to do it the same way. But, we can share this information. We can share the underlying economic forces. We can recognize what's going on out there so that we can deal with it and position ourselves. And I think that it's possible for everybody to have a decent existence because of that, and that's what we're doing here, is we're sharing that information. All right. We got a good gang here. We really do. All-nighter, we really, really do. And I think it's, for a lot of people out there, Cantillon is smiling upon from hell, spaghetti-o. Yeah. For a lot of people out there, I think they kind of feed a lot of false hopes. And they feed off a lot of false hopes. Like, they try and tell you it's better than it is, or maybe try and even tell you that it's worse than it is. But when you take it for the reality of what it is, like, hey, it's not going to be that shitty for everybody. Some people got it really, really, really good. Why? Do we blame them for that, or do we understand that they were able to position themselves accordingly? That's the difference inside of it. We can blame people all day long, or we can understand why they have it and we don't, and what it is that we can do to have it. Yeah. That's it, man. I mean, I wish it was awesome for everybody, and I think it can be awesome for a lot of people who do it. All right, we buy more or water filters. Yeah, buy the Berkey water filter. Man, that thing is expensive, and I make a commission off of it. All right. You guys are awesome. Thank you again for checking out that link to the UE University. Again, 7-day free trial that's offered up for another 4 or 5 days. Take advantage of that free trial. Go look at the credible threat theory. Look at all the sources. Again, like when you go through the credible threat theory, look at each one of those, segments of it. Go to the very bottom. There's sources down there where you will find the PDF files to all the different documents that I have researched and found throughout the Federal Reserve's, website. Put those speeches together, highlighted them so that you can have all the information. It's there for you. Go take it, right? Literally, go take it. Because after this weekend, you're gonna have to pay for it from that point on. And I have been trying so hard to get this information out there, just to push it out there to the people. At this point, I want them to take it, and I want them to take it now, or I just take it away before it's not available for them to take it. All right, Simon, I really do appreciate the free lifetime UE University membership. Yeah, Benny, you bet, man. And I appreciate you guys who joined in and are going to be a member of that community and participate in that community, because really sharing how it is that we are getting through this together, like sharing your experience and your story, is going to be helpful for the other people. Like, I know that's the way it was with me in alcohol. Like, the more I shared my story about my experience with it, the more I had people come and thank me saying, dude, because you shared your story, I have decided that, I decided to quit 6 months ago, and I'm still staying sober. Wow, right? Talk about an awesome thing to have for this channel, is to have somebody come and tell me, dude, you changed my perspective on life. I've given up alcohol because of the story that you have told. I didn't expect that. I wanted to talk about economics. I wanted to talk about underlying economic forces and monetary policy and stuff. But people heard that story, they related to it, and they were able to use it as far as, in my opinion, making their life that much better, right? And so, again, sharing your story is the important part. And that's what we're doing here. We're building a story and we're sharing it. All right. Uneducated Economist. You guys let me know.